Ant Group was supposed to be the biggest IPO ever at $37 billion US. Anticipation was high. Institutional and retail investors had piled in. Then came the news that the IPO would be called off. And the reason cited, new regulations to regulate the fintech industry in mainland China.
In order to protect investors, that's why they suspend the IPO. Put it in another way, if they allow the company to be listed and sooner or later investors find out that the regulation do have a large impact on the business, then the stock price will drop. The impact just too large to ignore.
The suspension will actually allow these rules to be sorted and investors to have full information before investing. This is prudent, and conversely, I see this protecting investors' interests and thus the integrity of the capital markets.
But questions have been raised about the timing. Why release these new draft rules a few days before Ant's IPO? Market observers say it could be because of different cultural norms.
The way they run their policies is a bit different from the Western world. A bit different because we're talking about the transparency. Okay, so transparency in the Western world, I mean, they discuss openly, you see. Whereas for China over here is that they tend to take the markets by surprise. Yeah, so that's why you see suddenly, why suddenly there's a big surprise after 3-4 weeks earlier, everything's okay. Suddenly, 2 days before the IPO, they say, hey, there's a change in things, you see.
Regulators, they say, have actually been contemplating how to regulate the fintech industry for a while. These players, including Ant, have become a key pillar of mainland China's financial system. On the one hand, regulators do not want to stifle their growth. But on the other hand, they see a need to keep them in check amid fears of rising defaults.
If you take a look of the end business, right? And on the one hand, actually, it is pretty creative and very innovative, right? It creates a business model which enable the micro loans to the consumers and small media size of the companies. And then the Ant Group use the big data, use the algorithm to manage the risk and then penetrate this mass market. From the regulations perspective, they also concern that the micro loans to those small medium-sized companies and also the consumer loans are going to grow so big, and then without proper risk management, if something got really wrong, and then it's going to affect the whole national financial security systems.
The observers agree that the saga around Ant is an isolated incident. The Alibaba affiliate is now one of the largest online credit services provider to consumers and small businesses in mainland China. As at end June, about 21% of all short-term consumer loans came through Ant's 2 consumer lending platforms. That unit is Ant's biggest earnings driver, contributing 40% to total revenue.
The impact on Ant Group, especially for its business model, may have a long-lasting impact. According to the latest requirement, if they fund any loan, they need to provide at least 30% of the amount of the loans, which they jointly supply the loan to the customers. There's a lot of much higher requirement on the capital level. The capacity to lend will be substantially reduced. That will have a huge impact on the business in terms of the revenues, in terms of the profit growth.
The draft regulations are open for feedback until December 2nd, and will need time to relook its business and comply with the new rules. Market talk is that it will eventually seek another listing.
It's not now talking about you submit another supplementary information. It's talking about changes in regulation. You need to increase your capital level. So the Ant Group may have some fundraising, or the Ali parent company may need to inject new capital into the company. So it takes at least, I guess, 3 to 6 months. In this case, then the company may need to issue another updated financial report. So I guess the second time of IPO, talking about 6 months later.
A less likely scenario, but increasingly possible, we'll see the IPO being shoved off for now. Why? valuations may be too low, one, and may want to prove to investors that it can execute those announced plans, show that it can navigate through the tightened regulations as what Alibaba has been doing in the last 10 years. Show good profitability before relisting again. And that path could probably take years.
Any new listing attempt will, however, be at lower valuations. Banks or financial companies generally have lower PE multiples than high-tech firms.
ANS Group is still a very attractive IPO target because historical high growth momentum and also the huge potential markets in China. And in emerging economy like China, actually there's a huge potential needs of the funding or capital for those like consumers and small or medium-sized companies, which is not fulfilled by those traditional commercial banks.
Fintech has been a big part of China's economic transformation, and it will take on added importance as the mainland embarks on its next phase of growth.
Chinese authorities also required this fintech company to drive their next economic growth strategy, which is this dual circulation policy, and as well as the internationalization of the digital yuan. So the current fintech company, they already had the hardware, which is the infrastructure, the software, which is the talent that they employ right now, to actually drive this digitalization yuan via their payment platform. The technology of Ant Group itself is actually gel in line with the broader aim, the broader strategy of China's dual circulation policy. So in order for the dual circulation policy to run, especially of growing of individual technology, we call it technology firm, and got to be inside this dual circulation strategy in the long term.
The dual circulation growth model focuses on both domestic reliance and global integration. Domestic reliance essentially means growing a domestic cycle of production, distribution, and consumption, so as to reduce dependence on overseas markets and technology.